everybody? Happy Tuesday. Welcome to the morning show on Stock Market TV. You know the drill right now. Spencer Israel, JC Parets. Strazza may be in and out today. He's got some stuff going on, but he will be live for the open bar after the show has concluded. Big day for us here on the morning show. Not one, but two new first-time guests. We love new guests on the show. We'll have JR Romero from T3 Live. He'll pop in about 10, 15 minutes or so. And then at 9, we'll have Spencer Jakab from the Wall Street Journal. It's going to be a very exciting day for us. We have much to discuss. Back and forth. There's war. There's no war. There's war. There's no war. Markets heads spinning. You don't need the headlines. Forget the headlines. We got the charts. That's what matters. And we're going to talk about it. So with that being said, let's go. Let's bring on JC. Thank you, Serge. I'm your favorite talking head? Wow, I appreciate that. Let's go ahead, bring on JC, start the show, drop us a like. Thank you very much. And here we go.
All right, ladies and gentlemen, I love Vegas. Can I just tell you?
I think it's great that you love Vegas, but remember, what's the rule? 48 hours or less.
I'm out of here tonight. That's it.
I don't make the rules. That's just the rule.
Quick and dirty. I played in a charity poker tournament yesterday.
Oh.
This just in, I suck at poker.
I also suck at poker.
I just don't play poker. I used to play poker like when it was cool, like when I was in college, like 20 years ago, like when that random dude won, right? Billy Millionaire. What was his name?
Yeah. I don't know, but I don't know, but I know, you know.
Right?
Yeah.
Billy
Chris Moneymaker, was that it?
That guy.
Yeah.
That guy. Chris Moneymaker wins. So
damn.
now every other schmuck in America thinks they can win the World Series of Poker. Yeah. As it turns out, they cannot.
No.
So I suck at it. So I just donated my money to charity, which is great. That's fine. You know, I don't gamble. I'm not a gambler. When they're like, JC, we really want you to play, I was like, all right, I'll play. But like that's the first time I've gambled in, I don't know, years. Couldn't tell you the last time. Maybe I threw on some money, like $100 on a fight once or something like that. Like a Pacquiao fight is probably the last time.
I respect that you are not of that world. I think that world is a bit of a cesspool. I gamble for fun on rare occasions, but we get our fix every day here doing this. We don't need our fix doing that.
Dude, I got so much action and exposure. The last thing I need is to be worrying about the Cleveland Browns game on a Sunday afternoon. Like, why the fuck would I want to like add stress to my life?
Yeah, exactly.
No, thank you.
Right.
I had a good crowd yesterday. So I'm here in Las Vegas at the Oxford Club. It's like the 28th annual event that they put on here, which is really impressive in and of itself. Have you ever been a part of putting on an event? It's like next to impossible. So the fact that these guys did it 28 years, amazing. Yeah. Great crowd. You know, a lot of fans of the show. You know, everybody says hi. Very cool to see. And, so nobody thinks it's a bubble. 0 hands went up. They all think that gold goes higher between now and the end of the year. None of them think oil goes higher between now and the end of the year. And like half the room thinks that the stock market goes higher between now and the end of the year.
Wait, hold on. Was the question specifically that they don't go higher between now and the end of the year, or that they don't?
Raise your hand. Raise your hand if you think gold goes higher between now and the end of the year.
So the high of the year is in for gold and for oil. That's what you're saying there, said?
No. The entire room, hundreds of people raised their hand that gold was going to go higher between now and the end of the year.
Okay, but for oil, the high of the year for oil is in. That's what you're saying.
Nobody raised their hand. All of them think that oil goes down between now and the rest of the year. So okay. I was like, well, you're not going to like some of my charts. And they laughed. They took it well. So it was fun. It was good. I got 40 minutes. I haven't gotten 40 minutes. They always give me 30 minutes and get me out of there. So they gave me 40. I took 45 and it was fine.
Yeah, man. These gold and silver charts are just, and oil. I mean, just crazy charts. All right, let's do a state of the market.
What do you say we talk about it? Yeah.
Let's talk about it. Just wild stuff every day. Just kind of nuts.
All right, ladies and gentlemen. Let's see. There were all kinds of rumors going around yesterday in the casino talking about how something blew up somewhere.
Things are blowing up. Yeah.
Things are blowing up. So oil's up 4%. So we got the Dow futures down 220. It's about 0.5%. S&P's down close to 0.5%. 30 handles, 6,600 even. You got the Nasdaq 100 futures also down 0.5%. $1.20. 30-year bond futures are down 112.5. Crude oil up 4%, pushing 92. Copper down 1.5% at 540. You got gold down almost a full percent, 43.75. You got silver down 0.75%. Just under 69, and the VIX still at 27. So 27 VIX, very elevated there. And over in funny money land, let's see what we got going on. What's cooking in funny money? Not much this morning. They were up a little bit, right? So you got Bitcoin just under 71,000 flat today. Ethereum also flat at 2160. Solana flat just under 92. And the total crypto market cap, Mr. Spencer Israel, 2.4 trillion. 2.4 trillion. How do we feel about this morning's futures?
Well, I don't feel any way about crypto markets. But
nothing going on there, huh?
No. I mean, it was cool when we were like, stop going down. That was fun. But now we're just sort of, doing nothing.
Going sideways, right? So first thing that they got to do is to stop going down. Right. They did that a month and a half ago.
Right. Exactly.
And then they've really been trading sideways ever since.
Yeah.
So is software, by the way, right? So it's a similar sort of
which I guess means more because nobody looks at like crypto as like a warning sign of like risk, maybe a little bit like risk off behavior, but like nobody panics when like Bitcoin crashes because that's what Bitcoin does. But when software crashes, people panic. So it's nice to see software at least stabilize. But no, to answer your original question, every day, oil, gold, silver. I mean, not so much, maybe not gold and silver, but oil every day. It's just there's 4 new headlines. You wake up and there's 4 new headlines overnight. That there is a fire here, or maybe missile launches were there, and the troops might be coming over here, and it's crazy. It's craziness.
Throw up that slide too, that new slide too. This is really what kind of makes me think that this is, or I mean, I shouldn't say the only thing. There's a few things out there that make me think that we could be in the early stages of something like this. But one of the things that we've seen so consistently over the years, Spencer, is these momentum thrusts. We talked about this yesterday. These momentum thrusts happen early in cycles, very consistently, very reliably. These are not evidence of exhaustion. Here we're looking at the best 8 days ever for oil and gas explorers relative to the precious metals explorers. And I showed this is, when the folks yesterday at the conference, they all thought oil was the highs were in and gold was going higher. And I said, you're not going to like some of the charts that I'm about to show you. This is what I was referring to, right? This is what I was referring to. And listen, I don't know what the market's going to do. And I told them that. And they don't know what the market's going to do either. I told them that also, right? So we're all on the same page that we don't know what's going to happen. I'm just presenting the data. And then, we got to do, we got to do the thing, right? I mean, I'm long energy stocks, so I'm talking my book, obviously, been long, so that's not anything new. This has been the trade of the year for us. I don't necessarily think it's over. And then forget right now and what I own or what's happening this quarter, kind of just zoom out. That's what this chart allows us to do, is to zoom out. And the zoomed out version of this sort of scenario would suggest that we're in the early stages. So again, I don't know. This doesn't mean that anything's going to happen tomorrow or next week or the next month. This is a long-term look, but I just really like the perspective that this brings.
It would be a bit of a bummer if like the trade of the year was over before Q1 ended. You know what I mean? We still got 3/4 of the year left. When people talk about the trade of the year, typically that means this was the great trade for most of the year, right? Or all of the year.
Well, when I'm talking about the trade of the year, meaning like the best trade that we put on this year is
yeah. Well,
the
so
energy
far,
team.
sure.
Yeah. I mean, I look at my biggest winners this year; they're all energy stocks.
I would say it's been the trade of the last 6 months, the last 2 quarters, right?
I wasn't in, but I didn't start buying these things until the beginning of the year, the end of the year, right? I wasn't in for quarters. I'm talking about myself. I can't speak to anybody else.
Okay.
In the market overall, yeah.
Yeah.
I'm just talking about myself. Let's see. You know, they liked the Scottie Pippen reference. I thought that landed pretty well. That's new material for me. Here, throw up slide 5. You as an avid sports fan, Spencer, you're the avid sports fan. So my thought process is that if the Dow Jones Industrial Average is Michael Jordan, then the Dow Jones Transportation Average is Scottie Pippen. No, am I wrong?
Sure, man. I mean, that is a very specific reference to a specific group of people, but
you don't think that landed to some? They don't know what the hell I was talking about.
I mean, I guess it makes sense. I mean,
it makes sense to you.
Yeah,
and it makes sense to me.
It makes sense to me a little bit, but
yeah,
no,
right. You know, the Bulls
whatever.
Don't win championships without Scottie, or they didn't win any championships without Scottie. I'm not saying they couldn't. They didn't. And we've never had bull markets without the trannies. And I'm not saying that we can't. I think I am saying we can't. But you know what I'm saying? We never have.
This analogy would make the S&P Phil Jackson, obviously, because he was the leader. He was the leader, right?
Yeah. Yes. Phil Jackson. Yeah. That's probably about right.
That's right. Okay.
I see what you did there.
Yeah.
And the Russell 2000 is Steve Kerr.
Sure. Yeah. All right.
Nice.
Because he's small. Okay.
You said it. I didn't say a word. I mean,
anyway,
he's a normal sized dude. He just looks small compared to the others. He's bigger than 2 of us.
He's bigger than me. I was gonna say, yeah.
So,
yeah. All right. Where are we going? Where are we going with this?
My point is, you know, I think the binary sort of situations that we have in the market, and we've talked about this, is really Scottie. Is Scottie going to be healthy? Right? We need Scottie Pippen to win championships. Is Scottie healthy or not? This is Scottie Pippen. Here we are. Is this retest a successful retest of that resistance, or is this going to be referred to as the great whipsaw of 26?
I don't have the answer.
And I didn't do this on purpose, but you know how like the Bulls, Scottie Pippen played for the Bulls, Transport's going up is playing for the Bulls, you know?
Yeah, okay. Yeah. I'm with you.
Yeah. All right.
I mean, there are lots of charts that look like that though.
Yes, there are.
That
here, I got 2 more for you quick.
That's not specific to the transports.
Throw up Steve Kerr. Steve Kerr's looking the same.
I was about to say that actually.
Yeah. Go look at Steve Kerr. I think Rick is on the slides. I don't think Rick knows who Steve Kerr is.
That's okay,
there he is, right? Rick, do you know who Steve Kerr is?
Rick, it's totally fine if you don't.
No, Rick is excused for not knowing.
Yeah.
Yeah, Rick does not know who Steve Kerr is.
Don't worry about it.
I mean, listen, we grow up differently with different cultures. Like, I'm sure there's some rugby player in New Zealand who's like a superstar, and I don't know who the fuck he is, and Louis could tell us. You know what I mean? Like, that's all right.
Uh-huh. That's true.
Small caps looked exactly like the transports.
Uh-huh. That's right. What does that mean?
I mean, it's like so this is it, you know? I'm having some internet issues, so I can't see the chat, but if you guys want to weigh in, let us know what you think.
Should we be overthinking like that relationship or no relationship? Just
I think my point here is that it's not being thought about enough.
I think we could probably agree that the longer this uncertainty in Iran goes on, the greater the likelihood that these charts break down, right? That's a pretty safe thing to say. So, isn't that kind of the only thing that matters right now? So who's
Dennis Rodman? The ARC?
I don't know who Dennis Rodman is in this scenario. I really don't.
It's got to be the ARC.
Dennis
Bill
Rodman
Cartwright? Remember Bill Cartwright's shot, like that weird shot?
Dennis Rodman is software stocks. I don't know.
All right, so let's talk. So who's coming on today? We got a great show today. Who's coming on?
Yeah, we're jammed. We got Jr. Romero. He's actually here backstage in the studio, so we'll bring him out momentarily. He's with T3. We got Spencer Jakab from this. This is going to be exciting because typically, we get guests on the show when they're like JC type of people. They're markets people. Spencer Jakab is I guess now he's more of just a commentator, but I started off as a reporter. My people, very exciting stuff for me. And then we'll have Phil Perlman on. So let's actually bring out Jr. Romero right now. We'll talk trading, see what he's doing, and then we'll see where the conversation takes us. Sound good? Sound good. Let's go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
JR, good morning. How we doing?
Good morning. Guys, I have a big issue here.
Yeah.
The IWM is clearly Mugsy, okay?
Because they're small. Okay.
I think we need to make that correction.
Right,
and the S&P 500 is Dikembe, and that's my final. That's my final offer.
All right, Dikembe, not like a George Mirasan, and not like if you're gonna go big, go big. Yao Ming, go big. Don't.
Okay, fair enough.
Yeah,
I'll accept that.
All right, cool.
What's up, JR? Welcome to the show.
How's it going? Long-time listener, first-time caller.
Excellent. Love the reference. Tell us about what you've been doing in the last month or so as the markets have been in turmoil, as they say on the television.
Have they been in turmoil, Spencer?
I'm just saying.
Dramatic, JR? A little dramatic from Spencer?
I love this market. I don't know what to tell you. People bitch and complain. I'm going, are you serious? We had a 140-point move in the S&Ps yesterday morning. There's a reason we're at our desks at 6 a.m. because you just never know when our president's going to tweet something crazy. And in this case, it was crazy good. We're short energy, long S&Ps, long the SPOOs, long Tesla. All these names. There's opportunities everywhere, every couple of minutes in this market. So I'm not really complaining.
What do you?
We want volatility. So.
Hold on, JR. Haven't you noticed over the years? Sorry, Spencer, but haven't you noticed over the years? Right, you've been trading for a long time. They're always going to be complaining. There's always a complaint.
Always.
These are the only stocks going up. Okay, well now, but these stocks, these are the ones that everybody owns, and they're not going up.
This time it's different. This time it's different, JC.
Right. Well, the good news is that it's different every time.
I know. Thank God. How boring would it be if it wasn't? So I'm loving the situation right now.
Either the market's going up and people are saying that it can't last forever, or it's not going up and complaining that it's not going up. So you really can't win. JR, what do you typically trade?
I trade whatever is moving. My life mantra is it's moving. I don't care if it's energy. I don't care if it's tech. I don't care if it's small caps. As long as it's moving up or down a lot, that is my primary focus.
So you're looking for beta?
Of course, I'm looking for things that are moving. SNDK puts in 50, 60-point moves on the day, and when it sets up, that's what we're all over. And that's what we focus on.
Do you have anything you won't touch, like a certain market cap or a certain?
I mean, I don't play penny stocks and stuff like that, but we're usually focused on mid cap and large cap stocks, and the main focus in this market is the narrative. This is a very narrative driven market, where the fears are. It's almost like a kabuki theater. They're telegraphed for weeks on end, and you just have to be super aware of what the market fear is, what the greed is, what people are focusing on, and you get these really strong 2 to 3 day moves, whether it's drones, whether it's industrial military complex stuff, whether it's solar, and you just have to watch three things: the 10-year, the dollar, and crude. And
okay, now let me ask you
well.
this. So you're focused on that 2-3 day period. Is that the length of your holding period?
Typically, we see. I mean, look, when the market was ripping, and we bought the April lows, we held swing trades on for months. I mean, we held all those crazy movers, ALAB, CRDO. We held Caterpillar from 440 into the 700s, right? When the market's trending and strong, and I love that rally in the industrials, by the way, back then. But now we're in a little bit of a different environment. Nobody knows what the hell is going on, and the way we're really capturing gains is by focusing on 1 to 3 day type of sequences. I find that seems to be working the best.
Well, I think this
now.
is an important point that I think gets overlooked. And what you're talking about, and folks, if you're listening out there, essentially what he's saying is that he's adapting to the environment, right? So in trending environments, volatility's falling. These trades can last longer. When volatility is triple what it was, and the overall environment is less trending, then moves that used to take months now happen in days, right? So the time horizon can be adjusted accordingly. Position size can be adjusted accordingly, because the moves that used to take weeks and months are now taking hours and days. So the position sizing changes as well. JR, am I right?
Yeah, there's a saying. Sometimes for decades nothing happens, and then for weeks everything happens, right?
Right. You get a decade in a week, yeah.
So we're going into a negative gamma environment, highly volatile. A lot happens very, very quickly, and we're focusing on capturing very large intraday or 2-3 day moves in things that the market is really paying attention to. And that's really the focus. You have to watch certain instruments and certain relationships, and have to have your nose to the market. As always, the issue is a lot of people got used to the 2020 to 2022 run, where they were just buying mega cap tech every morning, going golfing, coming back and cashing in, and that's not the environment we're in anymore. But the opportunities are enormous. The opportunities are really enormous. They're there almost every day. And it's just a matter of having your nose to the market to understand what it's really focusing on. And I actually think there's an edge there, because oftentimes when there's not a lot to do in the market and you have 1, 2, 3 big runners, all eyes are on in that particular poker table, and it just becomes a sort of a feeding frenzy. And we focus on that, and we do really well capturing that momentum. And as the market changes, obviously our strategy will change. When we were trending into September, October, when we got that Trump tweet of death, October 11th, on the tariffs, I had 48 long positions on in my swing account. Right now, we've gone to cash. And I loved the energy trade until this week, and now I'm wondering how sticky those prices are going to be if we get to some kind of final agreement with Iran, right? So now I'm backing off of that.
So
how do you filter down the stocks, right? You talk about mid caps and large caps. So I mean, you're talking about 1,000 stocks, basically.
Yeah, I mean,
just American stocks, or you're looking internationally as well?
No, I look at American stocks, but the most important thing I focus on is narrative, price action narrative. That we seem to rotate from. It's almost like a branching algorithm. When AI was hot, people were asking me what the next thing is. Like, obviously, you have to look at the related industries, because they're going to hop from one to the other, and they're just keeping it on ice for now. But I knew that quantum was going to be a big thing 2 months before it was a big thing. I knew that the fiber optic interconnects were going to be a big thing, and they turned out to be a big thing, right? And so,
so what's the next big thing?
What is the next big thing? I don't know. I really don't know. Do you know what the next big thing is? That would be helpful.
Well, I didn't know those other times.
I said, I've been saying robotics for the past 6 months, and it hasn't happened yet. So I'm going to say robotics for now. But I think there's so much turmoil in the markets now that I don't think the markets paid enough attention to the upcoming robotics revolution, which is going to change the
what
the
stocks
way
do you
work.
like in that group?
I've been watching SCRV. I think General Electric is going to be a late entrant into that space. I think IBM is going to surprise the world, and I think obviously Tesla.
General
has a big
Electric, the GE Aerospace, right?
Yes. And I think Tesla is also going to be a major player. I know it's almost like a little bit of an overplayed. Every time I talk to a Tesla bull, I can't help but kind of roll my eyes a little bit because they think Tesla's going to be all things to all people. They're going to make everything from automated muffins to robots. But I do think they have a major edge with their Optimus platform. In terms of
when am I getting a humanoid to make me coffee in the morning?
Don't know.
You know what? If I just wanted a crazy person to murder me in my sleep, I'd find a nice Jewish girl in Vegas and call it a day. You know what I'm saying? I'm not a fan of the whole robot thing, but apparently they're going to be $10,000 to $15,000 for a household robot. It's going to do your laundry.
Dude, take the trash out.
Take out the trash. Murder you in your sleep. All the things you ever wanted.
Listen, I just there's a link in the chat. If you're watching us on YouTube, there's a link in the chat to a masterclass that JR was running this week. Actually, I think it started yesterday. So check that out. I think, and you're live every day, right?
We're live every day. I'm an old school Wyckoff technician, so people really get a kick out of that. And we're technical traders for the most part, but the thing we like to bring to the market is really a broader view of things, understanding market relationships, understanding narratives, really getting more of a nose for the market than just your average room scanning small caps and looking for candlestick patterns and all that nonsense. So
I like what you're saying, that you're a Wyckoff guy, because you got Weinstein guys, you got Can Slim, O'Neill guys. I'm a Murphy guy. You're a Wyckoff guy. Like nice. Everybody's got their
Murphy's
guy.
A legend. Yeah, absolutely.
Sure, Wyckoff too.
Yeah, I mean, they're all legends. They're all legends in the market. I like to think of the market in terms of price cycles, in terms of secular versus secular, in terms of general cycles, in terms of leading industries and lagging industries. Those people, a lot of younger traders have forgotten, a century worth of knowledge. It's really important today. Nobody looks at the Dow transports anymore. Like, why? They're still super important. Well,
I mean, we got two Dow transports guys on one show. I'll see myself out.
JR, let me ask you something. Where your last name Romero? Where's that from?
Spain, sir.
Yeah, that's what I thought. My family's Romero's from Spain too, on my mom's side. Maybe I think we're cousins, bro.
We might be related.
I think we're cousins. Can you believe
you
that,
are,
Spencer?
You are the pretty face. I'm the voice for radio.
Wait, but what about me? My family's original name was Moreno. So we could all be related.
We're not cousins, Spencer. We're not cousins, all right? You're not in the family. Me and JR and me, we're in the family, right? We are Spaniards. Did your family go through Cuba, or they came straight here?
I'm from Spain.
My family went through Argentina, actually.
Got it.
Yeah.
All right. Argentina. I won't hold that against you.
Nobody's perfect.
But yeah, on my mom's side, we're Romeros. Yeah.
Very nice.
Appreciate you coming on. I know it was right before you're doing your thing, so we appreciate you taking time for us this morning.
It's a pleasure, guys. You guys run a great show. It's a pleasure to be here. Thank you.
No, thank you. It's great.
Guys, the link is in the chat to the masterclass that JR is running this week. My family comes from Spain too, so I'm in the club just a few hundred years ago. But
Spencer, look at you. Look at me.
I said, what I say? A few hundred years ago. It's been a minute. I've never even been to Spain.
We're like, we're like, you and me are like Cuban cousins. Like, like my grandparents, like their neighbors in Cuba and stuff like that. Like their kids were, like that's how it was. Right. Like your Cuban cousins. That's what you are.
Right.
You're like my Cuban cousin.
Fair enough. And JC, we would call you an honorary member of the tribe.
Is that what we would do?
Your honorary MOT. So listen, a couple weeks ago on the show, Spencer Jakab, whose newsletter I read every morning for the Wall Street Journal came up not once, but twice organically on this show. Once by me, once by Sam Rowe. So JC says, get him on and ask and ye shall receive. So Spencer Jakab is here right now. He's going to join us, talk to us about what he does and his approach to markets and life and investing. Let's bring him out.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Spencer, good morning.
Hey, good morning. How are you?
Spencer, how are you, sir?
I'm good.
This is quite an honor. I've only met 3 other Spencers in my life, so this is anytime I can meet a Spencer. You're number 4. This is a big deal for me. So,
Spencer, I saw your email. I couldn't say no.
I think it's the
chances
first time
of getting me on your show, just by being Spencer.
We got to stick together. There's so few of us. Anyway, no, the reason you were mentioned is because like I said, I read the Markets AM every morning, and the other week you were giving some love to technical analysis, which is what we talk about a lot on this show, and I brought it up, and we thought I thought it was a great analogy, right? I think you said it's like the X-ray for the markets, and so we wanted to just kind of bring you on and give you props because you don't see a ton of mentions in a positive light, at least.
Yeah, Spencer, I love to see it. I was like, we got to get him on the show. Get him on the show. And then a couple of weeks later, actually last week, I was with Sam Rowe, and I was like, we're talking about some of the things that he reads, and he's like, every morning I read Spencer Jakab, and I was like, I know who that guy is. He gives technical analysis love. So you got a lot of fans out here. I'd love to hear the story. Why are you the only journalist out there giving us love?
Not the only one.
Listen, I mean, you're not gonna. First, Sam's newsletter is great. TK or Ticker. I'm not sure how to pronounce it, but he writes a great investing newsletter. You're not going to see a lot of charts with sloping lines and resistance and support and Bollinger Bands in my newsletter. It goes to a very wide readership of probably 90% retail investors, readers of the Wall Street Journal, and maybe 10% guys on Wall Street. And I was giving it some love because people dismiss it too often. I mean, I think technical analysis is good at describing what's happening beneath the surface. If you're only looking at the surface, you don't see anything. There could be a tsunami coming in the ocean, and the surface looks calm a couple of miles out, right? And there's something important happening beneath the surface. I think technical analysis does a good job of describing the turnover, the churn, the handover between leaders and laggards. That sometimes can be a sign of danger, sometimes can be a sign of opportunity. And I simply pointed that out. I don't write about it very often, maybe twice ever in the history of my newsletter. So you caught me on a good day.
We caught. Wait, tell us about how you ended up doing this, because I always find people, their stories are interesting, and whether you come from the finance background or not a finance background, and you fall into this world. I'm curious about that.
Yeah, well, I'm a little older than you guys. I did come from a finance background. I actually accidentally got into to finance. I was doing a master's program in a different subject at Columbia University. This first day or second day, I was talking to a kid, who's now a 61-year-old kid, who was telling me that he'd been an investment banker and how awful it was. And it's excuse my ignorance, but what is an investment banker? What does a person like that do? I've heard the word. And he told me about how much he made. And this is in 1988, he made $80,000 plus bonus. I still remember it. And I was just so blown away. You can get paid that much. My parents were refugees. We didn't know anyone who had worked on Wall Street. I knew there was a Wall Street, and that, was it. And so what could I do to get into that? I said, take all the finance coursework you were allowed to then at Columbia Business School in accounting or whatever. And my family's from Hungary, and the Iron Curtain had just fallen. He said, they're going to be privatizing everything over there. So somebody will hire you. And he was right. And so, I spent the next 2 years diving in. I love it. I think finance is fascinating. And I made it my career. and I worked as a country analyst, and I was head of emerging markets research for the entire region. And then I got burnt out on it. I'd never really seen myself doing something like that in the first place, and I was frugal. And I found it very interesting, but you get to that level and you're just having meetings with people and just, internally and externally and visiting clients and stuff like that. It's not really a lot of analysis. And so, it'd be really fun to just write about this, have license to call people up and talk to them about finance and ask them questions. And so I've been doing that for 23 years. I've been at the Journal for quite a while. I was at the Financial Times before that. And it's a huge pay cut to go from finance to financial journalism, but it's more interesting for sure. And now I write the Markets AM newsletter, which goes, it's still free. They're going to eventually make it freemium or put it behind a paywall, but it's still free. Goes out every weekday to whoever wants to read it. And, it's like what's happening in markets. It's my essay of 500 words on what I'm writing about. And yeah, I wrote it today. I get up at 4 a.m. to finish it up. So I'm already like halfway through my day.
I was going to ask you, are you doing this like the night? Because there's always, we know that all the news happens overnight, right? Or the pre-market session. And are you, are you doing it like in the morning of like 5, 6 a.m.? And so I guess you just answered that.
I am at 4, but I basically, most days I have written something thematic or something going in the markets, or this company's reporting later this week, or this jobs is coming up or something. So, but then of course a crazy thing happens, then you need to tear it up. You need to spike the version of the newsletter you wrote and write a completely new one, bombing Iran or whatever. I mean, so things happen overnight that, that are so important that it would be crazy not to make that the main topic of the newsletter. But there are always links to stories, things I'm reading.
How do you make that distinction? Like a bomb in Iran, like that's maybe a more extreme example,
JC,
but like where's the line?
Executive decision. I need to say, like, what it would be. People will be scratching their heads if they're reading this newsletter in the morning that they get from me every day, and I didn't write about that really important thing. So I just have to make. There's no editor awake, at that time. So I just need to basically, make the call, and and then there's like somebody who reads over the copy in London because no one's awake yet in New York where I work, and then
I'm curious just about your own philosophies on markets. I mean, how often are you yourself using technicals in your own life?
I never am. I never do. I'm a very infrequent trader because since I've been a financial journalist, I haven't owned individual stocks. I own ETFs and stuff like that. I invest, obviously. That's how I could go into a field with lack of job security and pay, like financial journalism. Thank you, markets, right? I worked in them for a while and made enough. Never expected to have a job like that. And then, when I go to sleep, the money's working for me. So that's what I view it as, is like, the people, I know people who watch your show put a lot of energy into what they're going to buy, what they're going to sell, what they're analyzing, but you can do very well being completely passive too. Your money is still working for you. It's not like the lack of attention you're paying to it is going to meaningfully hurt your returns, and it can help them, especially on an after tax basis. So yeah, I'm an investor, but I don't think that I've ever used it. I pay attention to it because I think it shouldn't be dismissed out of hand. It's describing things happening beneath the surface. I can write 3 paragraphs to describe what's happening beneath the surface, but you guys can show 1 chart to show the same thing, and that there are names for it, and it's been analyzed. So that's the thing that people dismiss about technical analysis, is they think that it's hocus pocus, and it's not. It's I mean, obviously you can come to a lot of different conclusions from it, but it is like I wrote, it's like an X-ray. You can see what's, if there's like some disease beneath the skin or some good thing happening or whatever. I mean, that's the interesting thing about technical analysis to me. And so, yeah, I'm always interested in what's happening in markets, and I read those things with interest.
And then what I've learned, I've said this before on the show, is that there is a huge difference between like off the shelf technical analysis, like anybody like me, any schmuck with a computer can do, right? Draw lines on a chart, call it analysis, and you're done, versus like the actual professional, like CMT level, institutional level analysis that is really more about relationships than anything else, right? And I think that's why people might dismiss it, because they see, oh, it's just a bunch of lines. It's astrology for men, right? It's just
Mhm.
we're doing lines, but no, of course there's more.
And Spencer, one of the, I mean, you've been doing this a while, right? You've come to it from both sides. At the end of the day, technical analysis is the study of the behavior of the market, right? Versus the goods and the services that a particular market deals. And there's a lot about the market and the future that we don't know, right? As you're well aware, and everybody in the chat. But there are a few things that we do know for a fact in the market. Asset prices trend. They're not random. We know. Momentum begets more momentum. Momentum's a real thing. We know.
Right.
And we know that in order to be the best stocks, in order to be the best asset, you have to outperform your peers, right? So relative strength is a real thing. Money goes where it's being treated best. Like those things are real. So, as technicians, like we just start there and we focus on those things, right? The things that we know to be true. And then we're making decisions with incomplete information. We know that. We all are, technician or otherwise. So that's kind of how I think about it.
Yeah, momentum is one of the most consistent factors. As a matter of fact, if you distill it, it was, the Fama French. You guys are probably familiar with that, or maybe not everyone listening to this is. But Fama
you want to
French
explain to the folks?
Sure. It's these two professors at, I think both originally from University of Chicago, but they identified the factors that drive returns, the things that actually explain the bulk of returns. They said value, the size effect, things like that. One thing they didn't get into, and people only came to very late. And then as soon as people get, identify a factor, it kind of stops working as well. But this one has kept working, which is momentum. And I don't know if you guys look at this, but there's an annual kind of yearbook of very long-term investment returns. It's now put out by UBS, but it used to be put out by London Business School. The 125th one just came out. Now, the 125th anniversary, they didn't put it out in 1901, but it has all that data. And a really interesting thing is it looked decade by decade at what factor worked best, and the one that worked best most often was momentum. Momentum is one of the most robust factors that, for whatever reason, maybe because people are skeptical, has not been whittled away, continues to work. So basically, what's it's going up tends to, not indefinitely, will keep on going up. What's going down, which I wrote about recently, an interesting study, stocks that fall sharply from their all-time high tend to keep falling. If you blindly bought those stocks, you do very poorly. If you blindly buy stocks that you know nothing about that have been rising recently, according to certain parameters, as you guys know, it tends to do well. If you do momentum with an overlay on top of other things that we know work, like size, value, and what have you, then you can do pretty well. Luckily, you can do all those things through ETFs today. So if you don't want to get into the nitty-gritty and make a mistake and use trial and error, there are great products out there that harness those factors. They just don't always work. You can't expect them to. There's nothing that always works, right? I mean,
it's interesting you talk about the ETFs that have algorithms that essentially do that for you. Because there's two different ways to think about momentum, right? Like, the factors that you're talking about, mathematically proven, right? These are the ones that are going to do the best. So you own those. Great. And that's what the ETF is for. I like to look at it a lot for analysis as well. So like the 8-day rate of change between oil and gas explorers versus precious metals explorers was the greatest of all time, right? Last week. So that surge in momentum, that thrust, as us technicians like to call it, very consistently shows up early in cycles, right? It's not evidence of exhaustion. This is very consistently evidence of initiation, right? That is a momentum reading, one of many different kinds of momentum readings, right? So like momentum is a very broad word. I think the common denominator between, you ask 100 people what momentum is, you're going to get 100 different answers. But, they're mostly going to revolve around the rate of change of price, right? And there's a lot of different ways to measure that. So I think that from an execution standpoint, it adds value. From an analysis standpoint, because what does that mean? Well, if I'm zooming out and I'm seeing these momentum thrusts happening in the oil and gas explorers relative to precious metals explorers, and I'm thinking about my, plan over the coming quarters and years, I'm thinking about that initiation and making decisions for the portfolio, and that's influencing them tremendously.
Yeah, you and millions of other people are too, in their own way.
I wouldn't say that many people are looking at that 8-day rate of change.
I think that's what technical analysis is describing, is that that human emotion beneath the surface. And it's on two levels, right? There's the individual behavioral psychology that we are getting to know more and more about in the last 50 years, or let's say the last 40 years, I guess, which is very important, at least to understand why people do things and why people do seemingly irrational things. Not everyone is a completely irrational being, but then crowds especially are not very rational, and it's how crowds are reacting, and this sort of and that's an important reason why momentum works, and that'll never change. I guess maybe if AI runs everything, if we outsource everything to AI and AI has no emotions, then
No, Spencer,
it'll be okay,
because
right?
because they're going to be built by the humans too, right?
Well, yeah.
No, see, I knew I'd like this guy. Here he is talking about, human behavior and irrational decision making. Love this guy. Spencer Jakab, big fan of yours. Love
but wait, the indexes are taking over and they're going to ruin the market because there's going to be no active managers anymore. And no price discovery. I thought that's what
it's interesting. It gets to that point. I asked, this is some years ago. I think it was maybe the 40th anniversary of the first index fund, or 50th, I don't know, 40th maybe. Some years ago, I spoke with Charles Ellis, and I spoke with I think maybe not Jack Bogle, but whatever, like a few people. There was a whole series the Wall Street Journal was running on that, and it's like, what point, if you ask three kind of luminaries, what percent passively managed does the market have to get to where this kind of phenomenon where active managers on average can't beat the index? When does that flip? When does this price discovery start to matter?
Last year.
No, last year was one of the worst years. Look at read the Spiva report, SPIVA from S&P. Last year was a terrible year for active managers because they were wrong-footed twice. They were wrong-footed going into and wrong-footed coming out of Liberation Day. So they did horribly. It's like these volatile years is when their human emotions come into play too.
I think.
Wait. So what's the answer? Hold on.
Well, the answers they gave me, like one said 60, one said 70, one said 90 plus, and I don't think anyone knows. Yeah. Maybe we'll get to 90 plus, and then it'll be like like shooting fish in a barrel, picking stocks, because you'll have all this dumb money basically buying stocks on the basis of the index. My personal preference to deal with that is that ETFs and fund management have become so efficient and so tax efficient too, that you do not personally need to, if you just want to be, I know you guys are much more active than that, but anyone listening to this who wants to be passive, who doesn't really believe in the S&P 500 is too top heavy, too much dumb money running into it, you're buying things just because they went up, et cetera, all those problems. You can buy all kinds of alternative indices. You can buy stocks weighted on their cash flows, weighted on their size, equally weighted, whatever. There are a million ways to slice and dice the market. They're not quite as cheap and efficient as SPY, which is 0.03%, but they're pretty close. And the gains that you'll get from avoiding those index distortions usually outweigh what they cost. I mean, just the fact that, look at a week, and you guys, I'm sure, have talked about this on the show, a week when the index committee of Standard & Poor's says, we're adding these three stocks and we're removing these three stocks in a week. Well, what happened? The three stocks that are being removed plunge while they're still in the index. The three stocks being added to the index surge because they're going to be added to the index. So guess what? If you own an index fund, you're still tracking the market, but the market just got more expensive because three pretty expensive stocks that just rose got added to it, and three pretty cheap bombed out stocks left. Now, there's a demonstrable effect. If you, for example, and there's somebody launched an ETF to do this that I wrote about, if you went and just bought the rejects from indices and held them for 5 years, you get 500 basis points per annum of extra performance just because of the index effect. So, you're kind of paying for that as a passive investor. And so there are all kinds, I'm not saying to necessarily buy that product, but there are all kinds of ways to slice and dice the market that are more efficient than these big, dumb passive indices. So we're kind of in a golden era, especially if you don't sort of, buy the same thing everyone else is buying. But maybe we're in a golden era for charts and technical analysis and Bollinger Bands too. I don't know.
We
Guys.
always have
that's
been,
above
Spencer.
my pay grade. That all goes above my head.
No, listen.
Yeah.
It's always been a golden era for technical analysis. You're just one of the few that is vocalizing that in the public eye, and we appreciate that. I have a question about those bottles of wine behind you. What do you got there?
I knew it. I knew it.
Let's see. It's kosher for Passover wine. Getting ready for next week.
No,
Just looking at what it
no,
is.
not.
Yeah.
By the way, I had a
we don't
great.
do Manischewitz in this house. We
Okay.
good stuff. You know.
Okay,
Good for you. I had great kosher Bordeaux the other day. It was lovely. It was the Left Bank Bordeaux, 100% Cabernet Sauvignon kosher. It was lovely. At what's it called? La Marais over on 47th Street.
I don't know.
Oh, La Marais. Yeah, that's right. That's right down the street from the Wall Street Journal. Yeah, I walk by that place all the time.
It's a great spot.
Yeah. Yeah, no, this kosher for Passover, it's like a big business. I wrote about because I write like there's like funny page one articles in the Wall Street Journal. I like doing those sometimes. And like 2 years ago, I wrote about some people who are making kosher for Passover dog food.
Wow.
Big business.
It's like, really? It's like I talked to like a rabbi. I said it's absolutely not necessary. Your dog is not Jewish, whatever. But
Your dog is
pretty
not
funny.
Jewish.
But listen, it's someone's business, and they're making money. And they sent me some. I said, no, please don't. We're going to send you the dented cans because I can't accept anything from anyone. That's like ethical rules. And I gave it to the dog. You can hear my dog there in the background, and he got pretty sick. It upset his tummy. It was a little too rich for him. But
just like dog food and indexes, you have options. So put your money where your mouth is. To bring it back to the point, if you're scared about the over index or passivization of the market, go ahead and opt out of that system. But to your point, Spencer, people have been talking about this for 20 years now, probably longer, right? So,
but it's much more efficient today. That's the thing. Like you could pretty soon. I mean, it's going to be accessible to everyone. You can design your own index, right? Direct indexing. So it's we're in a golden era. You look at those long-term charts. Oh, if you'd only bought stocks in 1926, you'd make so much money. No, because you have to pay to reinvest the dividends. You have to pay a fortune to a broker to trade anything just to set up the account. You had to have a lot of money to set up a brokerage account in the 1920s. It's all like it looks good on paper, but today you can do it, right?
Yeah.
So it's a good time to be investing.
Awesome. All right. Well, Spencer Jakab, the writer of the Markets AM newsletter for the Wall Street Journal, we appreciate your time today. Thanks for joining us. This has been absolutely lovely.
Yeah, it's great.
Thanks, guys.
Yeah.
Thank you.
Have a nice day.
That was wonderful. That was wonderful, man.
Come on.
Yeah.
So good.
That was great.
So good. Shout out to Spencer Jakab. He's a behavioral guy.
I will admit it was a little bit confusing for me. Anytime you would say Spencer, I would look up, right? What? Someone's saying my name? But no, that was, again, I've been reading that newsletter for years, and he does great work. So shout out to him, and maybe maybe this is the start of a trend. I don't know. Maybe we'll have more writers, reporters. We'll see on the show.
I mean, listen, we've had some others in the past.
You're right. We've had one or two. You are correct. He is not the first, but I thought that was a great conversation. So thank you, Spencer, for coming on. It is 9:25. Markets are open in 5 minutes. We're going to end the show with Phil Perlman as we do every Tuesday. Before we do, just want to run through quick things that we didn't cover yet. Some movers, some headlines, all that jazz. Let's see, what do we got here? Estee Lauder is buying somebody, and the market doesn't like whenever you buy somebody. So the stock got hammered on that after the close yesterday. Kind of a little bit flat overnight, but down. We're on that headline. They're buying Puig. Do you know Puig brands? I don't know. They make perfume. I have no idea who they are, but Estee Lauder is buying them. Jeffries potentially on the block here. A report from the FT that one of those, I forget which one of the Japanese holding companies is maybe going to take them or take them over. So JEF popped on that after the close yesterday. Had a headline out of speaking of Japan, Nintendo reporting weak Switch 2 sales, so they're cutting production there. Stock got hit on that. Tesla had its first monthly increase in sales in Europe in a very long time. Not that it's going to move the stock all that much, but I thought that was interesting. What else do we have here on the movers list? I think that there's more, right? But that kind of covered the main stuff that I had here. CoreWeave got an upgrade or something this morning. We don't really care about that. I think that was kind of it. Just a lot of posturing, right? It's macro. I was talking to Jeff Mackey yesterday. He's like, "Yeah, it's all macro, right? That's the theme of the moment is everything macro. Micro headlines don't matter. Earnings probably don't even matter, right? It's all macro, and that's gonna decide everything. So that's where we're at. Macro will impact stocks. It will impact commodities. It'll impact all of it. Luckily, we have just the guys to talk about this stuff. We are very lucky here. We have guys that focus on mostly equities. We have guys that don't focus on equities. We have guys that focus on crypto or commodities or bonds or currencies or ETFs. We got everyone. So I do want to give a shout out to Jason Pers, who is our commodities guy, who's been absolutely crushing it. Really, I guess this entire bull run. Talked about the gold trade and the silver trade, and then while that trade was still going on, that trade wasn't over yet. He said, "Listen, if I know anything about market history, I know that energy is probably next." And then, well, wouldn't you know it? Energy was next. Funny how that worked out, right? So huge shout out to Pers. Jason's going live later on this week. It's going to be Thursday at 2:00 Eastern time. I'll put the link up on the screen. There it is, allstarcharts.com/bonanza-stocks. Special live event. Actually, I believe JC will also be there. I believe Sam Gatlin will be there as well. And he's going to talk about, Jason will, basically how he identified these cycles and sort of how he looks at this market, because it does behave differently, right? It's got its own quirks, the commodities do, than the U.S. large cap stocks, right? So different relationships, different patterns, different trends. And so he'll explain all that Thursday at 2:00. The link is on the screen. You should check it out. What else did I have to say? I think that was it. Oh, it is Tuesday. So Strazza will be live on the open bar with a special guest. That'll be at 10:00 Eastern time. So if you're watching us on YouTube, this show will and redirect you there. So you don't even have to do anything. If you're watching us on Twitter or X, it'll also be posted there as well. I think that was all I had on my list. I'm trying to come back and look if there is more on the stock front or the movers front. Nothing really interesting happened this morning on the movers front. Pretty quiet day.
We got the Dow. Dow's down almost 400 points right now. Kind of slowly melting throughout the morning, going into the open.
That's a good way of
Oil's up
describing
5%.
Yeah, that's a good way of describing it. It's a slow melt.
It's a slow melt, and they're off.
And there's the opening bell. That's fun.
And there's the opening bell with the Dow down 400.
Hold on a second. I just want to see.
Yeah, I mean, listen, interest rates. The conversation that I'm having in my head is the interest rates.
Okay.
Absolutely ripping. Just truly amazing how interest rates stopped going down as soon as the Fed started lowering interest rates. Right? Rates stopped going down. So rates absolutely ripping. Bonds getting hammered.
Is that just the market's way of saying, like, we don't believe you to the Fed, or we don't trust you?
I think it's just the Fed doesn't know anything. right? Obviously.
Well,
So it's really the market dictating. Remember, people are like, oh, the Fed is what determines interest rates. No. The market
other way-
sets the interest rates,
other
and
way
the
around.
Fed follows what the bond
Yeah.
market tells it to do.
Yeah.
Right. So rates absolutely ripping with energy. It's bad for bonds, and the Fed could sit here all day long telling you they're going to lower interest rates, but the stock market and the bond market is telling you the exact opposite. So
yeah. All right, let's end the show as we do every Tuesday with a pearl of wisdom from none other than Phil Perlman.
Pearl Dog.
Good morning. Good morning, gentlemen.
Good morning.
What's up,
Come on, man.
fellas?
How
So I'll
things?
tell you what it's telling you, Spencer. Price is truth. Price pays. That's it. There's nobody out there that can control price of the market.
Yeah.
You could have a whale come in, try to do something. You could have a Fed chairman come in with a put. You could have leaders of the country tell you things. Doesn't matter. Price is going to do what it's going to do. Yields are going to do what they're going to do. And it's always been that way. Just what it is.
Perlman, I've been thinking about this Andreessen thing. I even wrote about it. Zero introspection.
Yeah, listen, there's a million philosophical arguments that go both ways on this.
Right? That's why I'm asking you.
And to me, most of it is just an exercise. That's it. Like and it's not, I'm not even criticizing it. It's an interesting exercise, but it's an exercise and that's it nonetheless. You could sit around and debate anything. You could make incredible arguments. You could be passionate about it. But at the end of the day, debate and arguments are just debate and arguments. They're just words. So, some people can be very successful introspecting. Some people can be very, very successful not introspecting at all. Some people could be complete failures and do nothing but introspect and go down these rabbit holes for their life. And then other people can be incredibly unsuccessful with zero introspection and just going about their business perfectly oblivious. So I don't think there's any right answer. I think every person is similar and I think every person is different. And so once you find what works for you, you're good.
I mean, there's got to be somewhere in the middle. Like zero introspection, I think, is a little dramatic, and then overthinking and analysis, paralysis by too much analysis, and not reading books about doing push-ups instead of actually doing the push-ups. Like yes, there is a rabbit hole you can go down that's a negative, but like I got to tell you, I've been in Vegas for a couple of days. I've gone to the gym every day. I've been in bed by 9:30 each night. I feel fucking great. I got to tell you, I've been coming to Vegas for a couple of decades now. I feel terrible. The whole time I feel terrible.
Dude, I love you, bro. And hearing you say that just warms my heart. And you are just a case study for the Perlman Pro. You're becoming a case study for the Perlman program. And, I still remember that day I called you up and it was like, the Heat were playing on the West Coast. It was like a Tuesday night and the tip-off was like 10:30. And you had like some shit to do on Wednesday. You stay up, watch the game, and then I talk to you Wednesday. You're like, oh, I'm fucking tired. Oh,
and they lost.
And you come such a long way, my brother. What's that?
And I think they lost. I stayed up all
night. And they lost. And you look great, by the way, dude. That jacket. I'm gonna have to up my game. I'm gonna start wearing a jacket. You look like $1 million goddamn bucks.
It's Vegas, baby. It's beautiful babies everywhere. Vegas.
I love it.
Right, here's another one. The chat's making fun of me because I'm on my fourth of this. What is it? La Strazza. Lavazza. I know you're a big coffee guy. Is it also like a person to person? Like I sleep great. I slept great last night. I sleep great. I stopped drinking coffee at noon. And as long as I'm sleeping fine, I'm good, right? Drink all the coffee you want.
Coffee's great. Drink all the coffee you want.
As long as
you're up at night, stop drinking it. after a certain time. Drink plenty of water early in the day. If it keeps you up, it's not great. If we're all N of one. You sleep great at night. You stop drinking midday-ish. I do the same thing. I'll drink 6-7 cups of coffee, but I'll stop by 12:30, 1 o'clock.
Yeah.
10 o'clock, I'm out.
How many cups of coffee you drinking?
I'll drink 5, 6, 7, 8, depending. Early in the day. I'll
And
start
what kind of coffee are you drinking?
I just grind the beans. I drink, mostly Colombian beans.
You grind your
them,
own
put 'em in
beans? You're a
What's
bean
that?
grinder? You're a bean grinder?
I get whole bean, grind them, make a fresh pot every morning. My wife and I usually split the pot. I'll drink.
What, you'll make another pot after that?
Usually not. Usually don't. If I have a bad night's sleep, I might drink a little more. If I'm fasting, I might drink a little more, but not as much anymore.
So
I'll
you're
drink
pots.
2/3 of the pot.
So you're making pots. We're doing K-cups. We do K-cups in my house.
Yeah, I'm not a
I'm
K-cup
liking this
guy.
bougie, even though the chat was ripping me yesterday because they said this is trash.
Dude, you're such a foodie. If you went out and got yourself even a fair, decent, clean coffee maker, and you got yourself a little grinder, and you got some, you don't even have to get fancy beans. You just get good beans. You can go on Amazon and get them. You can go down to your local
gas station coffee. I'm not bougie with my coffee. I'm bougie with the
yeah,
wine,
but I
not
know
the
you.
coffee.
I know you, and you have a sophisticated palate. You're a sommelier. You cook. You send me. You send me pictures of food you just cooked. It's off the charts. You love taking me out to great restaurants. You do it every time we're in the city. You're like, hey, we got to go to this place. You're a foodie, dude. And you would love. You have a great cup of coffee that you made. You will love that. I guarantee.
All right, so I got to step up my coffee game.
I think you do.
Yeah, people keep telling me that my coffee game is weak, and it is, but I'm not ashamed of it. Like, I own it. My tequila game is weak too. I got to step up with my tequila game.
Good. You don't need a tequila game. That's it. That's good.
All right. Listen, let's get out of here. It's 9.
What do you got, Perlman? I'm asking you all the questions. Hold on.
Oh, so here's what I got. I just want to. I got 2 things. I'll talk about the spring thing next week because we're out of time. But I'm just going to plant this seed. The calendar and our lives give us plenty of opportunities to reinvent ourselves. Spring is a great one. It's a time of rebirth. Easter is rebirth, right? I mean, you know better than me, right? And so we all have these opportunities. Our birthday, New Year's Eve, all that, New Year's. We all have all these opportunities, and I love them because we can reinvent ourselves. So I just want to plant that. I'm going to talk about it next week, but I just want to plant that seed. The other thing I wanted to talk about today, just really quickly, we talked about this 2 weeks ago, but I want to revisit it. Nobody knows what's going on right now. No, everybody's got a strong opinion. Everybody's trying to talk with certainty. When you hear somebody talk with certainty in this environment, know this, they're full of shit. They have no idea what they're talking about because nobody knows what's going on. And you're hearing the president say one thing and then another. You don't know why. There might be a reason to it. There might not be. He might be crazy. He might be crazy like a fox. You hear the Iranians say something. You hear some pundit on TV say something about the oil supply. They have no idea what they're talking about. You have no idea what you're talking about. Price is truth, and that's all we got.
Well said.
That's it, bro. Dude, you look fantastic, by the way, JC. Love it.
He's looking great.
Oh,
thank you.
Styly.
Yep. And it's not even light out yet. All right, let's get out of here. The open bar.
It is.
It is? Okay. Open bar is going live with Strazza and special guest in 20 minutes. Stay tuned for that. We'll see you there. Thank you, Phil. Thank you to Spencer Jakab and to J.R. Romero. We'll be live back tomorrow morning. As always, same time, same place. Go make some money, all right?
I met my long lost cousin today on the show, Perlman.
Really?
Yeah. My long lost cousin from Spain.
Dude, that's
we go
incredible.
way back. I know. Amazing what the morning show brings family together. Yeah, he works at he's a trader at T3. Who knew?
Oh, really? And you guys are related, like legitimately?
I mean, we have the same last name on my mother's side and both from Spain, so who the fuck knows? But,
Same little village.
Yeah.
Yeah. Who knows?
I can't take no loss. I don't need no